Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, May 22nd, 2024. So, the pattern that I was following was this ascending triangle, and I said if the bulls were able to break through this, we were going to it had a 40-point upside target. And in the morning notes, I said, this is the pattern that's in play right now. But what you need to be, aware of is if this pattern fails, we're going to get a sell-off, and it's probably going to go down to the 52.84, which was the bottom of this range that I've originally been following. And you can see we made it down to the 52.85, so kind of counts on that. And from there, we saw buyers step in and push things back over the 5,300 level. And this is it. That there's really not a whole lot else to tell. Now, the one thing that I will say, and we don't really, it's kind of hard to go off of these because we've seen plenty of bottoms without bullish divergences. But this sell-off was pretty hard here. This is after the Fed minutes where people that are, inking in some kind of, I think it was like a 70% chance of a rate cut in June. The Fed minutes came out and said that there's some Fed governors that are willing to raise rates again. So that's what caused everything. But we're stuck in this range still. So from a larger, view, what it really looks like is that this was the wave 4 that we're forming right now, and it's we made it up. So this I would actually go and say I would go out on a limb and say that this is the completion of the wave 3 here. Because this could have been a failed fifth or whatever, but in any case, I'm going to put it. I think the safest way to do it is saying that we finished the wave 3, and this could be the wave 4 right here, which means that the next move would be the wave 5. Now, if it doesn't play out like that, then what it is we're going to come down, and this wave 4 is going to be deeper. And we're going to end up going somewhere. Oh, come on, what are you doing? All right. It's going to end up coming back down somewhere into the 51.98 level. So that's really, it's either this is the wave 4 here, or we're coming down here to make the wave 4, and we're still looking for the pending wave 5 up. And that's really about it. There's not a whole lot else to go over on this. We had the sell signals in place, or you can see that momentum was declining on the 60-minute chart. And the same thing was really going on with the 15-minute chart. We were just we had some bearish divergences, and then from there we just kind of stuck. And this is the biggest move we've seen down as far as candle wise in a while. So right now I would stay open-minded because we're still just in this range until we break out or down. That's when you really need to, that's when you're going to know when you're going to have a very solid trade, either on the downside or the upside. Everything else is just noise, as you can see here, because I actually today took a straddle trade because we were stuck here. And my reasoning on it that I sent to the members of the Credit Mastery Group is that if we do a credit spread, we're going to get stopped out either to the upside or the downside because we were coiling right here. And it made no sense doing it because we were waiting for the Fed minutes. So what I did was I took a 53.25. I bought the 53.25 call, believing that if we broke out, we were heading somewhere up into the 53.40, 53, maybe even 53.50. And if we broke to the downside, we are coming down to the 53.84. So to me, it was worth doing a straddle where it made no difference which way the market broke. And I got out, and believe it or not, it was a really good trade. I made with 10 contracts, it was close to $8,000. But the problem is if I didn't get stopped out because I just started lowering my stop. and got stopped out. This trade was worth almost 30,000 for 10 contracts, and it was a total of, I think, like $5,400. It wasn't anything. The investment on it was $5,400. But like I said, if the Fed minutes came out and we stayed right here, I would have been shocked, and I would have had to close that trade with a loss. But I was pretty confident just that we were coiling here, and you can see with just with volatility was just and volatility doesn't go this long unless we get some kind of move. So that's why I did that. And like I said, the members, I told them these are my targets, was the 52.84, and the upside was 53.40. But I said, you have to manage these on your own, because there was risk in this, and the risk was that the actual trade stayed right here. But so like I said, I took mine off early. I'm kicking myself a little bit right now, because it would have been nice hanging on to it as it went right down to the target, and it was this move right here that got me. Stopped out of it, and then from there we went down and met it. So it happens, but you know what? It was a decent gain on it. I'm not upset, but I'm kicking myself that it could have been a much bigger trade. So right now, do this. Just leave. Stay open minded. We're in this range until we break to the upside or the downside. Everything else is just noise. So with that, have a great night, and I'll talk to you guys in the morning.